What's going on, guys? Welcome to the Z Trade course overview. So today in this video we will be showing you pretty much exactly what our strategy is about. What is the Z Trade? That is the most common question of what the Z Trade is and how we actually use it in our everyday trading. This strategy can be used on an intraday level. It can be used on a swing trading style. For those of our swing traders that are out there that like to pretty much hold their trades on a long-term basis. It can work on an hourly time frame, a 4-hour time frame, and the lowest time frame that we actually go is pretty much a 30-minute time frame. So let's go ahead and hop right into exactly like what we're looking for and pertaining to us actually um, pretty much, in other words, taking the trading signal and actually buying in our favor to really make a good amount of money a day. Okay, so the first step is this here. Normally, we typically use our last 3 bars. So we do use like the most 3 recent bars, so that way we can have the most recent data when we actually take a trade. So when we do take a trade, pretty much we can profit and actually take advantage of what the setup is giving us at that particular time. This can be used off of trends, and we will hop pretty much back into that of exactly how to use that with the trends itself. So with that being said, okay, our strategy consists of the last 3 bars. We don't use candlesticks because of the reason why candlesticks, you have a lot more readings when it comes to actually involving, in other words, getting into the actual trade, especially when it comes to using indicators, which is something that we don't actually use. Everything is going to be straight off of a naked chart of what we call it. Okay, so let's go ahead and switch back to our actual bars here itself. Our bars are literally, or our trading strategy, excuse me, will literally consist of the last 3 bars here. Okay, so if this was what we seen at the time that our chart actually opened up, we will be looking at a strategy pertaining to these last 3 bars. These 3 bars are important because we're more so using how high the bar went, how low the bar went, where it closed at. Pretty much we need in detail depth of what this bar did, so that way when we do take a strategy or when we do take a trade from this strategy, we know that we're not guessing which way the market is actually going. And yes, it is a reversal type of strategy, so we are using reversal bars. That is our strategy. Okay, so with that being said, involving the last 3, so we have a green bar, a long green bar here that would be currently moving at the time that you see the market. We have a middle bar, which is another green bar that's actually stated in the middle. And then we have this red bar that looks more so kind of like a doji, um, which is something that we don't particularly trade. But for the most part, um, out of these last 3 will be like a setup that you'll be, in other words, actually looking for. Okay, so let's take a look at it. On a swing trading type of style, we'll be more so looking to actually hold this trade for pretty much about 3 days max. Okay, now there's a couple different ways of how you can actually take advantage of those 3 days if you do decide to stay in it for 3 days. But this doesn't necessarily mean that you have to stay in it for 3 days. You can literally get out of the actual trade whenever you want. Um, and then vice versa, even when it comes to the other side of selling too as well. So when you're on an intraday level, it'll be the same thing. That same rule will be intact with what we're seeing here on a daily time frame. So this is a daily time frame. Every single bar that we're actually looking at actually represents one single day. Okay, so we have back in December 12/12, which is one day. We have that following day, which is 12/11, which is another day. And then we have that following day, which is 12/8. So we see a little bit of a gap between the 9th and the 10th, which doesn't show. So we have 12/8, and then it hops right over to about 12/11. What this is pretty much, you can tell that the market actually closed on a Friday and reopened back up on the actual Sunday. By the way, guys, we are in the futures market. This strategy can be used with Forex, it can be used with futures, and it can be used with stocks. Okay, so let's take a look at here. Okay, let's look at what our options are. Okay, let's actually let me do a little bit of zooming out really quick here. So we see that the market, based off the last 3 bars where these arrows are at, we see that there was a little bit of downtrend starting from our left hand side back in October. We see the overall market did have a little bit of a trend going down, and then we see that it started to eventually come right back up and then again curved right back down, and then eventually found its way over here all the way to the bottom of about 75.02. Okay. With that being said, okay, the overall move of this market generally went down. We do have it to where, based off of these last three, yes, it is very little information of how we're basing our actual strategy to be able to determine what we're buying and when we're buying at that designated time. So let's say if we was to get in roughly around, let's hypothetically say roughly around 75.22. Okay. So we see that when the market decided to come down, our last three bars is what the information that we actually need in order for us to determine what we're doing. So these last three bars that we have, we see that the market did continue to fall. So the market sold off back on 12.8. And then the first bar that we get was our first green bar back on 12.11. So after that weekend from Friday, when the market opened back up on Sunday, we did pretty much have it to where on Sunday, this market actually pretty much went to a high of about 75.43, right? At the end of the day, when this market closed, we had to, at the time, this would be the forming bar. At the time, in other words, this would be the bar that's, once again said that it will be actually moving. So if that was the case, if we're entering in at 75.22 from that previous day, right? The market closed at 75.24. Then it reopened itself. We see that it found its way to reopen itself back up around like 75.26-ish. And then it started to pretty much trend back down. Because this bar right here gives us the setup as far as the first bar out of the last three bars, especially out of a strong downward move, a strong sell-off within the past 3 days, and then the first bar that actually comes back up. We had a strong sell-off, gives us the first bar, in other words, a first reversal bar to say, hey, this is an opportunity that we may actually go back up in the actual trade or on the actual chart itself. So with that being said, if we entered in at 75.22 for the entry point, and we actually, if we take a look at it, we actually came down, we did get triggered at 75.22. The lowest that this market came was absolutely about 75.19, right? So at 75.19, it starts to pull itself all the way back up. When it comes all the way back up, the highest point that we actually came to was about 75.80. Okay, but we roughly didn't close that high of the actual trade itself. It didn't actually close to about 75.58. Now, the reason why all of these are important is because we're all using whatever this market did, how high it went, how low it went, and where it actually closed at. So that way, when we do get into the trade, we know how to take advantage of the actual setup itself to be able to be consistently profiting. Not just one time, not once in a blue moon, every single day, or if you're on an hourly, more so of a day trader, you're going to be day trading this style too as well. Okay, so we got in at 75.22 is our entry point, right? As this starts to come up, okay, the highest it went was once again 75.80 and didn't close to about 75.60-ish, okay? So roughly due to where our entry is as far as like where we're getting in at, we already experienced a little bit of profits itself, okay? Now, again, we are able to actually hold this up for 3 days, so we can actually stay in this trading, in other words, this trade for about 3 days max. If we're more so leaning more towards that swing trading, once again, we're usually in and out of this trade by that next following morning. Okay, so let's say that next day actually closed. Boom, it closed at 75.60, and then it actually, we see a little bit of experience of a gap down here at 75.55, 75.54 level. And once again, the lowest, it didn't really come down too much, especially back down to where we got in at. It actually eventually pulled itself all the way back up. Now, by this time, you're going to be asking yourself, by the time you get into the trade, is how long do you actually stay in a trade for? That's going to be an actual general question. Okay. Now, we're in the trade. We're up about 76.40 where price is at. So let's do a little bit of calculations as far as where we're at. Okay. We're going to take that 75.22 of where we got in the market at, and we're going to subtract it by, let's say, the highest point. Let's say we did eventually hold it to about 76.40. That's about 118 points. In other words, once again, we are in futures. If you're dealing with Forex, it's going to be about 118 pips. So if we take that 118 and we actually multiply this with futures only, once again, this is only going to work with futures only, by the amount that this pays us per value that it moves by. In other words, per move. So this moves $10 at a time on Australian futures dollar. Okay. So we're going to multiply that 118 times 10. That's about $1,180 to where this actual price is at. Now, of course, you know, a lot of you guys will be saying, I'm going to pull the trade right now, which is completely fine at all, because I would probably do the same thing. So, you know, with that actually being said, we're up about 118 in profits just within a 2-day time period. And all of this came from a reversal bar that we're actually looking at here. To where, once again, the market actually sold off strong. You know, so we had a 3-day sell-off, and the first bar that we see was a reversal bar to come back up after the 3 days that it came down, right? So once again, we're able to hold this for about 3 days. So if we specify this first bar as day 1, this second bar as day 2, let's see what happened on that 3rd day. So the 3rd day did actually decide to go up. Okay, so on this 3rd day, I mean, we're a little bit more in profits, other than about, you know, 1180 what we seen on the actual chart itself. And this is our 3rd day. So again, we're able to hold it for 3 days, and you can pull this at any time. So I'm pretty sure a lot of you guys would have pulled the 180 or 1180, or maybe your goal is $100 or even $200. The possibilities of what we're seeing from our strategy is a maximum of about 1K a day if you do this right, especially with futures. Okay, so once again, you don't have to hold it until you hit 1K, because not all of your trades are going to go up that high in one single day. Some of it may, you know, you may see a trade that goes up maybe to about $500 in one single day, or, you know, X amount of pips, 50 points, 50 pips in one single day, and then the next day you see it shoot straight up. But luckily, with us, we got a trade to where we seen day 1, day 2, day 3, all in positives. And then when we take a look at that day 4, we see that a strong move down, it pretty much dropped. Now, I'm not going to say it dropped below back our entry, but that day 4 is a dropping point. Okay? So, it gave us about 3 days to pretty much really calculate and actually pull off in profits. If it was me, I would go ahead and pull that trade and actually look to go ahead and get back in on a fresh new trade. So let's look at another setup here. Okay, we have this setup here as well, to where pretty much we have a strong up move. So we can already tell by this point. Okay, now there's a couple things with this setup here itself. We can already tell from our original setup that we bought it pretty much at a bottom. Okay, and the trend eventually started to go up. So we had it, you can tell that the trend is up. Okay, vice versa with this one. Okay, this will be a fresh complete trade. So if you're still in this trade, it won't be a fresh trade as far as our previous chart that's set up down here. But let's say we start fresh on this one. So let's remove that, and we're looking at these last 3 bars compared to our right. So we have 1, we have 2, and then we have 3. Okay, same exact thing, to where we're going to be looking for the opportunity of a reversal. Okay, now we had a strong 3-day sell-off. The first reversal bar was the first move that we actually looked for, and then we actually also was able to get in around 75.22. Okay, same thing with this one. We have 1, 2, and 3 for the 3 bars that we're looking at. And let's say we was to possibly enter somewhere around the 76.68 level. Oh wait, looks like I got the wrong tool here. So let's say we was to enter around that 76.68 level, which is right here. Oh man, 1 second, guys. Sorry about this. So if we was to enter around that 76, still have to get that tool there, 76.68 level, right? and we entered in that level. We see a strong drawdown, right? So with that strong drawdown, again, remember we are in an uptrend. With that strong drawdown, we still have that opportunity to still be able to actually buy this up. So we would still actually be hanging in this trade as of right now. Around that 76.68 levels where we got in. It dropped to at least about 76.44, so about roughly 20 points negative that we're actually in. When this starts to actually go back up, so again, this will be my day one that we actually get into the trade. So if I take this as a day one, let's see what happened on day two. Remember, when this came down, it did come up to about a high of about 76.84. So let's see what actually happened with day two. Day two, once again, let me go ahead and extend this because we're still in a strong uptrend. So day two did the exact same thing to where, let's label this as day two. It came up here to this high of about 76.80. We got in around 76.68. So we seen a little bit of a turnaround. Right when this came back up, closed to the right, it reopened up at that same price. We seen another experience of a drawdown, so still roughly around 10-15 points down in negative. And then this actually came right back up to about 76.79. So this actually put us back in that positive range, back at that high. So I'm going to label this as day two, guys. With that being labeled as day two, we seen a high move of about 76.79, and we got in around 76.68. So roughly about a 10.11 point difference of profits that we actually see, which is roughly about $100 so far in profits, right? And this is only our day two. If we was to go into day three, let's see what happened day three. So day three bought itself strongly back up, let alone if we actually take a look at what happened from this time that we actually got in, right? So here's our first bar that we bought on, and then take a look at what we're seeing right now. Last three, these setups are the exact same as each other, still in that complete uptrend. So even though we've seen a strong upward move go at least up to about 77.07, there it goes again, guys, our profits that we actually see. So we're up about 76.68, roughly around almost about 50 points in some profits. So let's take that 76.68 and let's subtract it by, let's say if we would have got out at 77.06, that's about 38 points that it moved. So if we're doing at 38 points once again, we're up about $10 as far as like the tick value that it moves by. So we need to multiply that 38 times 10. So we're roughly about $380 at this point into profits. And once again, we can actually pull that. And all of this actually happened within pretty much 3 trades. So if we was doing this within a month time frame, we had 3 trades, profit at least about roughly over between 1,300 so far in profits to about 1,700 if we taken this one, pull the profits on the first one, and then re-entered off of the second reverse bar and actually bought itself back up. So on this trade, just holding it through that process, we're up about $380, and it's actually not bad. Once again, we can kind of see how that plays out. From that third day, well, this is actually the third day. Let's see what happens with that fourth day that we actually had. Okay, the fourth day shoots itself right back up. Okay, so luckily again, we was able to actually hold it just a bit higher and roughly pull off at least about a little bit higher in profits of what we're actually looking for. Okay, so when you're actually buying this type of setup, you need to make sure that you're looking for roughly around the points that are going to give you the opportunity to buy in on the uptrend. So we are trending up, and let alone even holding it for the entire time, if that was something that you was willing to do. We bought it in originally at 75.25. The overall move moved all the way up as far as the overall market moved up to about 77.20. So the overall move in between us going up was about pretty much almost $2,000. Okay, so 1950 is the overall move that we actually looked for to actually hold it up. Okay, and as that goes up, we see that overall market move from the time that we bought it originally moved up. Okay, now there's a couple of things that of course, when we actually look to buy, we don't necessarily look for, we want to make sure that we have an actual accurate great buying signal, because we don't want to take a trade just to actually take it. So there's a couple things we do abide by when it comes to this actual strategy. Very, very easy and simple strategy to actually set up. And I really hope you guys, do become a part of the Z Trade, because the Z Trade is really one of the actual best things here. As far as it goes with that, I hope you guys enjoyed the video, and I do look forward to getting started with you guys on the actual Z Trade.